Hey guys, and welcome to Weekly Property News Update. I'm Brett Alegre-wood, and today is the 2nd of March 2012. So I'm actually here in Singapore. I've been here for the last week running seminars and meeting with clients, and I wanted to just basically update you on the UK property market, and in particular I'm going to spend a bit of time on the London property market, because really that seems to be where the money is right now, and that's where house prices are increasing and this. And look, if we look at the UK house prices, and all over the news this week it's been talking about how UK house prices are stagnant. Okay, and what they're talking about, when you add up all the house prices across the place, then yes, they are stagnant. And in actual fact, we had our largest jump in the last 2 years, which was 0.6% in 1 month. Okay, for house prices. So that was good for house prices. But when you look at it, actually, London house prices had a 2.5% jump in 1 month. Okay, so London house prices are above £350,000 now, average. Okay, so the interesting thing there is that what you're finding, and I've been saying this for quite some time, is that it's a two-tier society, a two-speed society, whereby London is racing off, and London is, the fundamentals are rebuilding and everything's going really well. Outside, not so much. Okay, and that's why we're selling a lot of London property now, because really that's where the capital growth is going to be first, and then of course it ripples out. So if you're looking to get into London, you might want to start thinking about it, because at the end of the day, with 2.5% a month, it doesn't take too many months before you really start seeing some gains. Now, will they stay? Because obviously you've got Europe and all this sort of stuff. The interesting thing is a lot of, and this is a side issue, but there's a lot of Europeans coming back to the London market. Why? London is seen as a safe haven. So as much as the news is telling you how bad things are, in actual fact, we've got a lot of our Greek buyers back. It's amazing how many buyers from Greece are coming in. And quite simply because they need to have, I think, a managed exit from the euro. They need to default on their debt. And I actually think, and it's interesting, there's an article out talking about them taking a full default. In other words, rather than this whole thing that they're negotiating and taking on debt, it's going to take them years. And really, I think eventually they're going to have to come to the point where they go, actually, let's just default. Argentina did it in 2001. Iceland did it in 2008. And if you look at Argentina, great growth after 3, 4, 5 years after. Iceland property prices, when you adjust for inflation, actually have had the biggest rise. So yes, they've had a fall, they took the fall, they got it over and done with, and if you look at it, what happens when somebody defaults, then nobody wants to trade with them, nobody wants to do anything. Initially, prices drop, everything comes down, and it drops down really quickly. Then what will happen, everything's cheaper, so now it becomes more desirable, because I've got the choice of buying from somewhere that has very cheap goods, buying something that has expensive goods. I don't really care that they've just defaulted and got rid of all their debts. In actual fact, arguably they're in a better position. If you look at some of the airlines, when 9/11 hit, they filed for bankruptcy protection. Okay, those are the airlines, and they got rid of some of their debts, right? Restructured their debts, renegotiated their debts. They're the airlines which now, today, are very strong. And the ones that actually battled through 9/11, didn't do that, are ones now that are actually having to merge and having falling over and these sort of things. So sometimes, as much as we've got this stigma about debt and how bad it is and we've got to pay it back and all that sort of stuff, actually, when you get in too deep, sometimes the best option is just to say, hey, enough, I'm not paying this back. Go the bankruptcy option, get clear, learn the lessons, because you don't want to be back into the same situation at a later date. Okay, but I think that's really important. But house prices in London, they are going up. The fundamentals are there. We've got lots of demand from international buyers because it's a world city. Okay, and I haven't been talking about the Europeans coming back, but they're starting to come back in their droves. We've got the local market coming back. The bankers, they're getting their bonuses. They're putting it back into property. We haven't seen that for about 3 years, as well as the Russians, the Asians, the Middle Easterns. Okay, so if you're in any of those areas, now's the time to be getting involved in UK property, because, in London property, all right, because that's going to be your best thing, and really you don't have a choice about the other stuff unless you're prepared to pay cash, all right. So it's really important, and some of these concepts, we really need to take them on board and see the opportunity for what it is now. Yes, we can listen to the media, yes, we can watch TV, and yes, we can be concerned about what happens if euro defaults and euro breaks up and all this sort of stuff. And there is the potential of that happen. But the fact is, you're buying real estate, and because you're buying real estate, even though euro might fall up and then the UK economy doesn't do so well, things get a bit bumpy, house prices might even drop. The fact is you've got a real asset. The rents are on their up, and the more turmoil there is, the less availability of funds to first-time buyers and people out to get on the house. That drives up the demand. There's a lack of supply because builders aren't building, they can't get the financing. It's interesting because still now everyone's talking about buy-to-let. Lenders are coming back, we've got new lenders coming back all the time. It's creating that internal demand, and that's what we want. Everything's heading in the right direction. We're on course, and yes, there's plenty of risks, but I want to tell you that, based on what I'm seeing, based on what I'm reading, and based on all the research I'm doing, London property, fantastic. Outside London property, look, you got to take a long-term view, and if you're going to be going there, stick to those 13 university towns that I talk about, which is the 13 biggest towns with universities, except for Liverpool, okay? And if any of you have heard me speak about why we don't do Liverpool, I'm not going to say it on camera, but there's good reason. Call the team and ask them, and I'm sure they'll explain to you. But look, guys, that's all I had for this week. Hopefully, I'm getting across some of these principles, because these are really fundamental principles. And if you aren't in London and you don't know the London market, this is the stuff that's going on. This is the stuff that's getting reported in the newspapers. Maybe you're not seeing that. Maybe you're seeing a different side of it, what the news media wants to tell you. But when you're on the ground and when you're speaking to the locals, this is the sort of stuff which is being touted around by the professionals. The news media in the UK is still being negative, all right? And that's their role. That creates or sells papers, which is what they want. All right, guys, have a great week, and we'll see you soon.